I used AI to analyze stocks for 30 days. Here's what every investor should know. Imagine having a Wall Street research assistant. Available 24 hours a day. One that can explain company earnings, compare businesses, summarize financial reports, and help you spot risks in seconds. Sounds too good to be true? Well, that's exactly what artificial intelligence can do today. But after using AI to analyze stocks for 30 days, I discovered something surprising. AI is incredibly powerful, but it's also dangerous if you trust it blindly. Today, I'll show you 8 ways AI can make you a smarter stock investor, the mistakes most beginners make, and why AI should be your research partner, not your financial advisor. Let's dive in. Can AI really pick winning stocks? Let's answer the biggest question first. Can AI tell you exactly which stock will double next year? No, and if someone promises that, run the other way. Stock prices depend on countless factors: company performance, economic conditions, interest rates, competition, global events, and investor emotions. No AI can predict all of that perfectly. But AI can help you make more informed decisions by organizing information, highlighting patterns, and saving you hours of research. That's where its real power lies. AI reads financial reports in minutes. Imagine downloading a company's annual report. It's over 200 pages long. Most people never read it. AI can summarize the key points in minutes. It can explain revenue growth, profit trends, debt levels, cash flow, business risks, future guidance. Instead of spending hours reading technical language, you get a simple overview that helps you understand the company's financial health. Then, if something looks important, you can dig deeper into the original report. AI compares companies side by side. Suppose you're deciding between 2 companies in the same industry. Instead of jumping between dozens of websites, ask AI to compare them. It can summarize business models, revenue growth, profit margins, debt, competitive advantages, recent developments, potential risks. AI won't tell you which company to buy, but it can help you understand the differences much faster. That means you spend less time searching and more time thinking. AI helps you understand market news every day. Thousands of financial news articles are published. No one has time to read. AI can summarize major developments in seconds. For example, if a company announces new products, reports earnings, or faces legal issues, AI can explain what happened in simple language. Instead of drowning in headlines, you focus on what actually matters. Just remember, always verify important news using reliable sources. AI can help spot risks. One of AI's biggest strengths isn't finding opportunities. It's helping you notice risks. Ask AI questions like, what are the biggest risks facing this company? Who are its biggest competitors? What challenges could affect future growth? AI may highlight issues like heavy debt, declining sales, dependence on one product, regulatory concerns, or increasing competition. These insights help you ask better questions before investing. AI helps remove emotional decisions. One of the biggest enemies of investors is emotion. When markets crash, people panic. When prices soar, people chase the hype. AI doesn't feel fear. It doesn't get greedy. It simply helps organize information and evaluate different scenarios. That doesn't mean AI is always right, but it can help you pause, think logically, and avoid impulsive decisions driven by headlines or social media. The biggest mistake investors make with AI. Here's the biggest mistake. People ask AI, "Tell me the best stock to buy today." That's the wrong question. Instead ask, "What should I analyze before investing in this company? What financial metrics matter? What risks should I understand? What questions should I ask before making a decision?" The quality of your answers depends on the quality of your questions. AI is a powerful research assistant, not a shortcut to guaranteed profits. Final thoughts: artificial intelligence is changing how investors research companies. It helps simplify complex information, save time, understand businesses, compare opportunities, and become a more informed investor. But here's the most important lesson from my 30-day experiment. Successful investing isn't about finding a magic AI prompt. It's about building knowledge, thinking long-term, managing risk, and making disciplined decisions. Use AI to become smarter, not lazier. Because the investors who combine human judgment with AI-powered research will have a real advantage in the years ahead. If you enjoyed this video, subscribe to Alex AI Profit Lab. Every week, we explore how AI is transforming investing, productivity, business, technology, and the future of work. Hit the like button, share this video with someone interested in investing, and let me know in the comments, how are you using AI in your investing journey? Disclaimer: this video is for educational purposes only and is not financial or investment advice. Investing in the stock market involves risk, including the possible loss of principal. Always conduct your own research and consider consulting a qualified financial advisor before making investment decisions.